Alpha Fam Coach Jam here with another market update. Before we begin, I do want to say that nothing in these videos is financial advice. Everything's for educational purposes only. It's just my own analysis on the market. Also, if you're new to the Alpha Syndicate channel, if you could please give us a like, comment, and a subscribe. We really do appreciate the support. Let's get into the market, guys. So we've had a very, very explosive market over the last few days. And this is going to be a very important update, all right, because there's some dynamics that have changed. We've been talking for months now. If you've been tracking and following this channel, we've been tracking this accumulation range. I've said a few times there's some key indicators that we look for breakouts. One of the biggest is going to be if and when we broke above the 50 and held it as support, which we have. This is usually a very good indication that we are going to start a new uptrend and we are actually going to start breaking out. This is also can be a fake out. If you look back at prior times where we've actually broken above the 50 from an accumulation range, you can see just back over here in April, that break above the 50 led to this entire move all the way up to 124 before coming back below it. You also have when we had this breakout right here, when we had the breakout retest, and then that's finally what led to the move to the 100,000. Now, I also want to show you that you have these fake outs. So I know that, guys, I'm not sure how long some of you guys have been in the market, but I remember distinctly being in this accumulation range right here. It was awful. During that range, we had a couple of breakouts that I even thought were going to be where we would start actually making our next move up. One of them was right here, guys. When we broke back above after losing the 50 right here, and we got back above it and retested it 2 times as support, and we started to move up, then you can see this is when the Japan carry trade unraveled. All right. With that being said, this is a big reason why I'm being a little bit cautious, because I am worried until 100% we get an actual agreement with Iran, a 100% agreement that at any time there could be something that happens, and we just seen it happen on Saturday, which would essentially just retrace the entire move. And you can see, even though we're getting this explosive move right now in the market, you can see what happened on Saturday when they announced that the first basic talks disintegrated or didn't work out. JD Vance made an announcement, and you can see the market turbo dumped off of that. So this is why I think being cautious is smart, but you also can't fade what we're also seeing neither. So I said it about not only the U.S. market and the crypto market breaking above the 50, but I would also change my bias on the stock market from it going from being in a downtrend to basically, you can look at how I would kind of classify this as like basically this entire move that you've seen right here, we're now creating a new structure essentially. Until we actually break above this level, that would be it's kind of my line in the sand. Now this is insanely bullish. Like we did break back above the 50. We've had numerous green days now in the futures and both in that and the stock market. What I am worried about is when we come up to here, which has been major resistance. This has been our all-time high. We haven't been able to break above it. And if this thing comes up here and then rejects, there is a chance of this thing coming back down maybe further and going lower. Also, if there is at any time some type of aggression, you will also see the same thing. Now, I will say this, because we've broken, and you can even see on the NASDAQ, and you can also see on the S&P 500, they're all well above it at this point. So what we could actually see is maybe not a breakdown, but if, let's say, something does happen, you get a red candle that comes back down, retest this 50, and then pushes up. And if we do that, that would also be kind of another clue that we are, in fact, going to start making new all-time highs in the stock market. And I think crypto is going to follow with it. More than anything, guys, all right, I think we get some type of ceasefire soon. I'm not saying that we're going to go straight up to, Valhalla, but I do think that through the next couple of months, especially coming into April or leaving April going into May, we should definitely start looking at this zone to be broken out of. And I've said it several times in prior videos is May's when Jerome Powell gets replaced. Jerome Powell's getting replaced. So with that being said, the market's starting to price that event in early. It's going to start pricing it in now. If you can remove the Iran FUD, I've said this several times, you really don't have anything but really, really, really good economic data. We are 100% in QE. We are well above the 50. They just put another $18 billion in this week from the $18 billion that they just did the week before. And you can see, guys, like the liquidity is here. It's definitely 100% here. And I think the market is going to start understand. I think the market does understand that. And I think the market is, pricing these things in. I think they're pricing in an end of the conflict, a new Fed, QE, and I think that's what the market is starting to focus on. I think it's starting to, you get these times, guys, where the market starts to, and this is what creates bear market floors, and this is what creates new uptrends, which is bear markets are created by a set of continual, nonstop events, FUD events that cause massive amounts of fear, uncertainty, and doubt. And then eventually those events end, and guess what happens next? Bullish events and bullish catalysts start to happen. And that's what causes bull runs. But more than anything, what causes bull runs is liquidity, guys. Liquidity is what drives these markets, and we finally are starting to get it. And you guys, I've showed you this several times. You can see the significance from this last time we did QE back in 18 to 19, and then when we finally broke above it in 19, you can see that just, how much money got poured into the market. And again, we know that there were stimulus checks at this time, so I don't expect this type of expansive move up unless they actually do give out stimulus checks from the tariffs, which I'm not holding my breath on. But we also have to understand that we're in midterm years. You can see oil is dumping very hard, guys. Dumping very hard. And this is a very important thing too, because we need oil to go down, because if oil doesn't hurry up and go down, and Trump knows this as well, inflation is going to start ticking up. And it's going to make it incredibly hard for the Fed to cut rates if inflation's starting to go up. All right, guys? With that being said, I'm watching this stuff extremely close right now. Extremely close. I'm very excited. I think we've been nailing this, guys. I think Alpha Syndicate as a whole has been very stoic during this time and understood what we were at. I think we understand market structure. And if you've been following this channel for a while, we've been talking about this, guys. And I've said it too to you guys several times. There's going to be a lot of people that miss this move. Why? Because they're not going to believe in it. You know why? Because it's still not in their magical 365-day bear market floor. That's why. They're going to be looking at this, and this is exactly how people are looking at this market, is they're measuring and saying, oh, okay, we made a local top in October. We shouldn't start breaking out till Q4 because it's going to take a year. We're only 190 days in. I still got, X amount of days left to be able to do what I want. And I think that complacency is going to really have a lot of people lose a lot of money. And then what's going to happen is FOMO is going to kick in. Because when Bitcoin does, and it will, whether it does it now or if it does it in a couple months or whatever, when Bitcoin starts to drift up towards these $90,000, $100,000 levels, it's going to be undeniable that Bitcoin is no longer in a bear market. And I think we're going to start seeing massive amounts of FOMO. Nobody's going to care when they bought their crypto, whether they bought Bitcoin at 65,000, 60,000, or 75,000. Nobody's going to care when it's above 100 grand again. Just like Solana. Like if you bought your Solana at $70 or $80, you're not going to care when it's above 200. Same thing for SUI. Like if you bought your SUI at 96 cents, or if you bought it at 85 cents, or if you bought it at $2, or you bought it at whatever and it's back at $5, $6, you're not going to care. It's not going to matter. That's why accumulation ranges exist. This is why you set limit orders. This is why you stay stoic. And if you want to learn this stuff, guys, it's the first time you've ever seen any of my content. My name's Coach JM. I've been a digital asset investor for over 5 years. And if you want to learn how we combine the macro, the fundamentals, and the technical analysis together, if you want a place where you can get coached and mentored by somebody like me, click the link below, guys. We'll see you inside.